This stock will surprise everyone. This is not financial advice, but my research suggests it's a good idea to buy $50 of this by November 28th. Fractional shares are available, and this company, although it's a $400 stock, it's a big company, $18 billion in revenue. Most of its peers are not very big, and it seems like sort of a flight to quality situation. This company, HCA, they operate urgent care facilities, surgery centers, thousands of them. So that 18 billion revenue starts to make sense when you add all that up, roughly. And they raised guidance, so they expect to make even more. And a lot of these littler companies, littler roll-ups, are not doing so well that are publicly traded. So let's jump into why this roll-up, which is essentially what it is, right? I'm not sure all these facilities are synergistically communicating among one another, is doing so well. So we'll jump into the chart. We'll jump into some info about the business. It's not financial advice, but hope it helps.
This is Sam Putnam.
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 This is Sam Putnam. This is Sam Putnam.
So this is the chart. HCA Healthcare looks a little like this. Pretty strong earnings reaction, and you can see that earnings result, which is a beat. When it's a beat, it doesn't always go up, but this one did, and it's been super solid this year. It's maybe compared to some stocks, 45% doesn't seem crazy, but this is a big company, 18 billion in revenue, and it's forming this nice base here where it does offer an opportunity to buy above, say, 480. So holding this moving average as well, there's some recent interest. I think this is setting up to be a really compelling opportunity, even if you knew nothing about what these guys do. But we are going to look at what they do because it's helpful to see and get a just feel for, are there other tickers that we should be looking at? And so far, it seems like there are not. If we look at some of these other hospital operators, ACHC, one of them, Acadia, just doing terrible. And this is what I mean by a flight to quality. If you look at Universal Health, UHS, acute care, and CYH, UHS, solid, but very small, very illiquid, like 100 million a day. So maybe interesting for small accounts, but CYH, a sell-off as well. I mean, the majority of them don't look great. THC being the next one, Tenet, a for-profit hospital operator as well, selling off as well. So for that reason, in terms of the big boys, HCA is sort of in a league of its own. Not that this earnings reaction was perfect. We can sort of zoom in and see what we're talking about here. Solid and then held. So it wasn't perfect, but it looks good in general. I mean, compared to a lot of other earnings reactions, I mean, I should give Netflix some credit because it's been coming back. Well, it was before this whole government reopening, sell the news event or whatever was happening. It'll be interesting to see. Obviously, it'll be interesting, but if we gap up or gap down on futures, will really be an indication of how people are worried or not worried about this government data that might be coming out, or if something else is afoot. Because it's a little weird to have the government shutdown stop, aka reopen, then have this big sell-off. But despite that, there are stocks setting up that really have nothing to do with that. I mean, this down day was nothing to do with the SPY. You can see the market in the background. Here's a big day, 10-10, and HCA barely went down at all. So that Trump Xi conflict didn't have a dent in HCA. So definitely setting up as an interesting buy here. And like I said, the other companies are not really setting up for the most part. So it's not to say that this one's going to have all the interest and do do very well, but I'm just saying it's not a traditional situation where all the stocks in the theme are doing well. That's not what's happening here. So we have to be a little aware of that and either buy the momentum if it really starts to take off, or if it starts to falter, get out immediately, given that other peers did not so great. So here's the earning per share right here, raise of guidance. I mean, these are big numbers for sure. So we don't really have anything to compare it with again in this sector because the other ones are small. But they're definitely benefiting from demand, operating at scale. I mean, 2,000 surgery centers, emergency rooms, I guess, that are kind of like in malls or something, urgent care centers. That's a lot in 21 states and the United Kingdom. So I guess in the big states, probably. And they've devoted some money to clinical studies as well, which, you know, we can feel good about that or whatever. But what it does say is that this might have sort of a name brand that gives it some staying power among its peers. That I can't imagine if you're a new urgent care roll up or startup or whatever you want to call it, doctor doing a private practice for that you suddenly want to go commission clinical studies on the side, right? But it's definitely great that they're doing that. And it might give them sort of a competitive advantage. I mean, reducing bloodstream infections in ICU patients by 44%. Who knows if a clinical protocol is really that groundbreaking or if it's just documenting what other people already know works. But in any case, this is a lot of customers, which they call patients, obviously, 35 million. So despite the low institutional ownership, this one definitely seems interesting. Given that it's something, you know, you could think of private equity being really interested in rolling up urgent care centers. Of course, there's not great stories about that in the paper, but you know what? Right now, we just have to have our investor hat in. Keep everything else sort of not clouding our vision. So that's the company. Again, those similar tickers not doing super well. And we'll keep an eye on basically if they're keeping up and able to hit that guidance. So if you like these ideas, hit that like button. If you want a free course on how to buy stocks before they go up, hit that subscribe. And if you want to join a Discord on stocks, join us there. I'll see you on Monday morning. It's $25 for 7 days. Stockscommunity.com.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.